Unfortunately, the past few weeks have been pretty red for the semiconductor market. We can see popular stock Nvidia is down roughly 20% from its monthly high. On today's episode, I want to take a closer look at my top 3 stocks for the AI space and the semiconductor space here in September, and ones that I personally want to take advantage of during this dip. For each companies, I want to take a closer look at valuations, growth opportunities, even share what I think would be my price targets of entering or adding into the stocks. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
If this is your first time here, Jose Najarro, master's in electrical engineering, worked at some pretty cool places, and now I'm pretty much just a semiconductor stock nerd. So let's get started with the first company. So the first stock I actually want to take a closer look at is Advanced Micro Devices, ticker AMD. The stock right now is sitting at a market cap of $217 billion. Year to date, though, the stock is down roughly 3.05%, which is wild to me because AMD, as we're going to see, is a company that provides a lot of solutions in the AI space, in the PC space, and it's very, very diversified. From its year to date high, the stock is down roughly 36%. At one point, the stock was sitting over $200. Luckily, if you've been following this channel, you guys know how much I thought that 200 price point was a no-go, but now sitting at these levels, I think this is probably one of my favorite stocks this month. Now, just a quick background for those not familiar with AMD. AMD pretty much provides 2 main components for various industries, CPUs and GPUs. They provide GPUs for the data center space, for the client space, for the gaming space, and for the embedded space. Within those markets, they also provide CPUs. In the GPUs, they have like the MI300X. They have their, I forget their accelerators for the consumer market. In the CPUs, they have their EPYC CPUs, which is taking market share from Intel, and they have the Ryzen CPUs, which again is taking market share from Intel. So we can see a huge variety of industries from AI, from consumer, from industrial, and I do believe that's what allows AMD to be so diversified, and any of these markets can really pop off and be a huge benefactor for AMD. Now, the reasons I am bullish for AMD is, look, growth opportunity. The data center GPU is one that they continue to increase their expectations. For example, they do believe for this year that data center GPU will be roughly $4.5 billion, up from $4 billion that they guided in April, thanks to the growth of their MI300 platform. So for those that are not familiar, this is kind of a competitor to Nvidia's H100. I personally mentioned it in the past. I don't think AMD's GPUs are the next Nvidia H100, H200s, but there is an opportunity for them to make a nice amount of revenue. Other opportunities for them is the AI market expansion. AI solutions are going into various things like CPUs. We're seeing kind of this AI PC craze. We're going to see AI go into gaming, into other kind of embedded solutions. And like we saw earlier, AMD is very diversified amongst on those industries, and they provide GPUs, which would be very great AI accelerators. Outside of that, the third growth opportunities would be the client segment. So this is the consumer market. They continue to gain market share from Intel in the long term of things in the PC CPU space, in the laptop CPU space. So I believe they're going to continue, as unfortunately, if you've been following Intel, you know that they are definitely lagging behind and have a lot of problems right now. And I think AMD is taking this opportunity to go full throttle on CPUs and take more market share from them. Now, some key products and technologies, so you guys might want to Google them. AMD's MI300 platform, that is their data center GPU. Their EPYC CPUs are their CPUs for the data center and for the server market. Like I mentioned, they are taking market share. And then the Ryzen AI 300 series, which is their recently announced CPUs that go for the laptop market, which we're seeing kind of this AI PC space. In the future, they are going to release their next generation of EPYC CPUs. That is going to be called the Turin, and the Turin is expected to come out later this year, again, taking even more market share from Intel. Now, AMD recently did do a kind of benchmark for their MI300X, and we can see their MI300X is very comparable to NVIDIA's H100 when looking at 8 times GPU solutions. NVIDIA's kind of solutions right now dominate when you're looking at very, very large clusters, but if you're looking at small servers with 8 GPUs, we can see AMD's MI300 is a very, very comparable monster. Now, prices I wouldn't mind adding. Obviously, these prices are not recommendations and they can go lower, but the mid 130s, and we're around those levels right now for AMD. Also, the mid 120s, I believe, are also great opportunities. So normally I would just buy a nice bulk once and then be happy with my adding of my positioning and see if we stay around these levels for a few weeks, or do I get better buying opportunities later on. Now, I highlighted a lot of great information in that slide right here where I talked about growth opportunities, key products, and these are actually points from my ebook. I'm actually giving a free sample out. The link is down below. In this free sample, there's 10 semiconductor companies that I cover. In my main ebook, I cover I believe 49. So this is a free sample if you want to check it out. There's also a very special offer there if you want to go and purchase the full ebook. Now, if we're taking a closer look at AMD, we can see they do have a nice amount of cash and short-term investments, roughly $5.3 billion, long-term debt of 1.7, so plenty of cash at hands. They did just recently announce an acquisition to increase their AI solutions, so this might change in the upcoming quarter, but overall, I do believe their balance sheet is pretty strong, especially with a positive free cash flow of 1.4 billion. And this is during the bottom of the cycle. We've kind of had this over inventory corrections in the server CPU, in the consumer CPUs, and we can see how that kind of hurt them. And now we're kind of picking back up. So I do believe we're going to see a nice amount of free cash flow growth. Next, growth estimates. The company is not highly growing right now, but I believe that will continue to change as we are moving back to a nice upcycle for AMD. In forms of PE ratio, we can see forward 1 year, which is about a year and a half from now, is about 25. I personally believe that is very cheap for a company that can definitely benefit from the AI space, from the consumer space, from the embedded market. So that's why AMD is one on the top of my list. Now, the second company should come to no surprise. This is Nvidia. And remember, these are my personal top 3, the ones that I'm personally looking at right now to really add more into my overall portfolio. So Nvidia, we can see, unfortunately, like we saw in the chart below, from its monthly high, the stock is down roughly 20%. From its year-to-date high, it's down roughly around 26%. So for those that are not familiar with Nvidia, Nvidia is pretty much driving this AI move. They have various software solutions, hardware solutions, from GPUs, CPUs, DPUs, the list goes on, networking solutions. They have various infrastructure solutions to really build out these AI factories, which are creating this next industrial revolution of AI. So this is the one that's completely dominating the AI space. Obviously, they have other markets like gaming GPUs, but those at the moment are non-existent. Not non-existent. I mean, when you compare data center revenue of roughly 26 billion versus gaming of 2.8 billion, we know this is really dependent on the data center side. Now, what are some growth opportunities from Nvidia? So right now, we believe that the biggest customers for Nvidia are just your cloud data center suppliers like Amazon, like Google, like Microsoft. But in their most recent earnings, Nvidia mentioned that enterprise AI is picking up, and this is going to be a nice revenue growth for upcoming quarters. So this is individual companies picking up the AI market. Sovereign AI, this is individual countries building infrastructure for their country needs. They are increasing their networking solution. For example, Spectrum X, which was released this year, and I believe this quarter, is well on track to begin a multi-billion-dollar product line within a year. So networking is one that we don't hear too much about Nvidia, but they provide a lot of solutions, software and services. They have about a 2 billion run rate on their software solutions. Now, some other great opportunities for Nvidia is they continue to be supply constraint. So they have plenty of demand, and demand for their current generation, the Hopper architectures really well. And anticipation for Blackwell is also pretty strong. Now, in forms of market analysis, they're very bullish in the AI space overall. The automotive market is already a multi-billion-dollar revenue for them in forms of AI clouding solution. The healthcare market is expected to become a multi-billion-dollar business for AI compute. The robotics market is also pretty strong. Now, in forms of Nvidia, we can see that Nvidia did also do benchmark, and they showcase how, look, MI300 is very good next to the H100, but it's nowhere near to the H200 700 watt system or 1000 watt system, which is liquid cooled. So Nvidia right now dominates the space. They are the leader, and this is not even looking at the Blackwell platform, which is going to dominate even more. So my prices I wouldn't mind adding, but obviously can go lower, are the low 100s and the high 90s. That's exactly where we're at right now. So Nvidia is definitely close on my watch list. Now we can see, because of this AI craze, look at that free cash flow in the past 12 months, $46 billion. They pretty much can cover their total long-term debt, and they have about $34 billion in cash and short-term investments. So this is just racking up cash, and I believe it's going to save them for any future movements in the market. Revenue growth this current fiscal year expected to grow 106%. This most recent quarter grew 122%. So I don't believe we're going to see many more. I don't think we're going to see any more triple quarter revenue growth, but we are going to see high double-digit growth, and that's going to continue as Nvidia continues to dominate in the AI space. Now, PE ratio for 1 year, 25, very similar to AMD's levels. This one, I want to say the reason I like AMD is because AMD is very diversified. Nvidia right now is pretty much just focused on the AI space. So AMD has definitely more opportunities to outshine in growth potential. Nvidia, obviously right now, they are the king here and can definitely grow dramatically in AI space, but is solely dependent in that market. Now, the last company is one that I don't have in my portfolio. The first two are actually my two biggest position, AMD and Nvidia. Number 3 is one I don't own, but I can't stop looking at it right now. And this is Lam Research Corporation. And normally, if you're familiar with me, this is a semiconductor equipment companies, and I usually don't go with the big players like Lam Research. But right now, it's looking pretty attractive. Year to date, the stock is down roughly 2%. From its year to date high, the stock is down roughly 35%. So what does Lam Research do? So like I mentioned, they provide semiconductor equipment needed for the manufacturing process. They do things like deposition, like etching, like strip and clean, like mass metrology. So they are in various segments in the manufacturing process space. Now, the real reason I am excited about is their semiconductor equipment is actually mainly, most of their customers are actually in the memory side. If you guys know AI space right now, they're very dependent in one special type of memory, which is HBM, high bandwidth memory, which is used in pretty much all types of AI chips. HBM is actually just a form of DRAM, which is a segment of the memory market. And we can see right now, Lam Research mentions that the current focus on model training, driving strong demand for GPUs and HBM. AI expansion is really focusing on DRAM, and the memory wafer equipment is expected to be biased towards technology upgrades. So we are going into HBM4, HBM4E, HBM3, 12 high stack, and the list goes on and on. The great thing is Lam's sizable installed base is more in the memory side, and because they're more dependent on the memory market, then obviously with this nice growth in HBM and AI solutions, they can definitely see huge growth opportunities. So like I mentioned, growth opportunities are AI-driven demand, driving more demand for more memory like DRAM, HBM. But HBM is just mainly used on AI accelerators. DRAM would be used in things like your PCs, your smartphones, and more memory is needed in those AI solutions. Lam Research, a big player in the memory space, can benefit from this. Outside of that, they do kind of provide consumer solution, not consumer, but they do updates, maintenance on those equipments, and if they're buying more equipments, they'll be able to service more equipment, which is a very high margin business. So they see that growing. For me, prices I wouldn't mind adding into Lam Research or entering in my position would be in the 730s, or also I believe it can go down to the 660s. Right now, if we look at Lam Research, it is in those 730s. So I think this is going to be a great opportunity for me to add into a big semiconductor equipment company. Lam Research, plenty of cash. They do have a nice amount of long-term debt, but they have plenty of free cash flow. Very mature company, not one I would worry about. They are expected to grow around 17% this fiscal year, and most recent quarter they grew about 20% after kind of coming from a downturn in the market. Again, we're picking things back up, so I believe this is going to grow and grow over time. PE ratio for 1 year, 15.94. This is one of the lowest, or it's been for a few years now. So I think Lam Research is definitely looking pretty attractive. And if you're tired of your typical AMD and Nvidia approach, I think Lam Research would be the best way to play the HBM market without investing in memory companies like Micron, because those tend to be very commoditized. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.